My fellow investors, you've used Google to find answers to your questions. Why not use Google to make money? I'm going to go over today how you could use Google stock or ETFs to make you money and how it could be a welcome addition to pretty much anyone's portfolio. Let's dive into Q2 most recent earnings and go over the revenue and operating income of Alphabet, the parent company of Google. All right, so we see almost everything has gone up year over year, 12% for Google search. A lot of analysts have speculated that this would take a big hit because of AI companies, and that hasn't happened as of yet. So we still see nice gains in Google search. There's YouTube ads. YouTube ads have also earned more revenue, up 13%, even more than search. The only thing that took a hit, and it was only a 1% hit year over year, was Google Network. And then you can see subscriptions, platforms, and devices has gone up 20% year over year. But the biggest winner of all has been cloud. The cloud services up 32% year over year. Google is planning to allocate $85 billion in 2025 for AI cloud services. So they're making efforts to grow this even more. You may have heard Google has just struck a 6-year cloud computing deal with Meta worth over $10 billion. So as companies grow, this happened with Home Depot in the recent past. They grew and they got to a point where they really needed to move their big data to Google. They were doing it in-house, and it just became a necessity for them to, just use Google and their services for their big data needs. And this is going to happen over and over with different companies. They're going to grow, and eventually they're going to need to outsource their big data. And there are many industries that Google targets. This is their main focus. And we could see retail, manufacturing, financial services, government, media, education. So most companies are going to fall under this umbrella. This covers a wide range of, companies that will turn to Google for their AI and cloud needs. I want to pull up this chart. This is a 5-year chart of Google stock, and it is up 152.92% in the past 5 years. There will be buying opportunities because there's going to be some drawbacks from investors taking profit from this stock. So keep that in mind if you're planning on, buying into Google or to ETFs. And along with the cloud services and subscriptions, search, and all these services that have been doing better year over year, Google also has been very savvy with their acquisitions. So they're always able to, if not use and expand their own services to make acquisitions and further increase their share value. Let's look at some projections from analysts and where this could possibly go. Decide to go out 3 years, 2028, and this is broken down by month. So we could see anywhere from plus 61% all the way up to almost 90% by the end of 2028. Now, of course, this could be higher, this could be lower. This is, again, analyst projections of where the price may be. We see a lot of growth potential in these next 3 years. Now, before we go over these different ETFs that you can utilize to get either monthly or weekly distributions and payments through Google stock, I wanted to go over the market cap and IV because this affects their distributions. So the market cap is 2.5 trillion. It's quite large, right? It's a part of the Mag 7. The reason I bring up market cap is when you have a large market cap, the inflows and the outflows into that market cap are not going to affect the volatility as much as if it was a smaller market cap, say like a 500 billion market cap. They still affect it, right? But the chances of it, having wild swings in the volatility go down as the market cap gets bigger, right? That's true for all assets. When you look at the implied volatility, we'll compare it to the NASDAQ 100 first. The NASDAQ 100 has a current IV of 16.2. Google is at 30.2 currently. That's higher than the Qs, but it's less than something like Tesla stock, which currently is in the 40s. So it's not the highest IV out there, but it is pretty competitive as far as say an options fund or a Roundhill weekly. But there's definitely ETFs out there, and there's definitely companies that are tied to options funds or Roundhill weeklies that can pay you more because they have higher IV. So keep that in mind. So here are two options funds that are out for Google, GOOW and GOOP. One is yield max, one is curve. We can look at the total returns here, and we can only go back to October 31st, 2023 to today. And GOOW is overall return is 29.53% to GOOP 59.03%. So if you're gonna go with total returns, GOOP is the winner for options income. Now, my personal pick is to go with GOOW from Roundhill for total returns, while also getting a nice distribution. So the distributions are generated from a proprietary formula that Roundhill uses that takes the recent total returns plus the IV, and that will give you the distribution. Okay, so this is going to vary from week to week. It could vary quite a bit, as a matter of fact, so expect that volatility in payments also. So I think that Google stock or GOOW are really good additions to your portfolio. I have a small position. I'm going to continue to grow it over time, but I think that Google has a lot of potential moving forward. It may not be, the highest implied volatility, but it's pretty competitive still. Thanks for watching. Remember to like and subscribe, and stay tuned.